कैसा तुम्हारा ऐप दिखना चाहिए, इसके अंदर फीचर्स क्या होने चाहिए।
Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guest on the show. Joining us today are Samir Kalra of Target Investing and Mayuresh Joshi of William O'Neill India. Many thanks to both of my guests for joining me. On the show today, we analyze the results of Kotak Mahindra Bank. Asset quality saw a marginal deterioration compared to the last quarter, while the commentary too was subdued. We ask our guest that one topic that they're recommending their clients from the pharma space. Prestige Estates is the third stock in focus. The stock has rallied almost 45% in the last 3 months. We discuss whether the rally will continue or no. And finally, we ask our guest one stock that they believe could outperform in the near term, and that is something that they're recommending to their clients currently. But let's start with the first one. Kotak Mahindra Bank came out with the numbers. The counter has corrected significantly, almost 100 rupees from the top that it did yesterday, given the fact that the growth simply didn't come in for Kotak Bank. So we'll ask a guest what should one do with Kotak. Mayuresh, I'll start with you. Yeah. Firstly, what did you make of the numbers, and then in the conference call, what did you make of the commentary?
So afternoon, Darshan. First of all, I think the numbers were a little bit soft, right? And the commentary was not encouraging as well. So when you're probably talking about how the prospects will be, maybe 2-3 quarters down the line, the improvement will start coming through for the sector as a whole. And Kotak probably gets the benefit because it's got the capital adequacy. It's almost at 17.9% in terms of Tier 1 ratios. Again, I think the base that it has got at this point of time, and again the post-merger synergies that will probably come through, because I think a lot of dilution in terms of asset quality recognition has already taken place. But if you look at the finer details of the numbers, advances growth were 10%, right? But they're absolutely flattish on a quarter-on-quarter basis. The PCR stands at 64%. There has been a deterioration in the GNPAs and the net NPAs, 2.46, 0.86 respectively. The 3 points which probably stand out is that CASA has probably moved higher, so it's around 53.2 at this point of time. NIMs have inched higher at 4.69, which is one of the best in the industry so far. And the third element obviously is that the TD sweep deposits are probably increasing. So at 7.5%, I think they will be having access to low-cost deposits as they increase. But I think the confidence just doesn't come through, because when the asset quality probably remains subdued at this point of time, I think at least a quarter or two will still be given in terms of the softness of numbers. So I think we're downgrading the stock at this point.
Okay, and what's your sense on the commentary that the management indicated? Does it indicate that times will get tough for them?
So I think everybody's chasing the same retail assets, right? So I think within the retail pie itself, with the slowdown that we witnessed, and with everybody chasing the same element, you're bound to see slowdown pressures keep through. So you've seen that in the sense of HDFC Bank results as well. You've probably seen that on the retail side of Kotak Bank results as well. So again, management commentary in terms of a low double-digit growth from the mid-teens, I think that probably doesn't augur well for the valuations that the stock is sitting at this point of time.
Okay, Samir, what's your sense? What did you make of the numbers and the commentary?
So I think the numbers were a bit disappointing given on the deposit growths. Advances, okay, you can be more cautious in the environment, understood. But I think deposit growth, and especially when you're focusing on the retail deposits through your branding of 811 and all, so I think cost of acquisition on that deposit increases. Your deposit growth is now kind of going into a plateau mode. Another quarter will make sure of it. And I think on the asset quality side, now the asset quality worry kicks in for Kotak. I think past 2 quarters they have outperformed on the asset quality, at least in the industry wise. And that's where the valuations have given that kind of a confidence, irrespective of the promoter dilution issue. So I think now that will come back to the normalization, and that I think another 10 to 15% downside is there in the scope until next results come in and the picture gets much more clearer and the direction gets much more clearer out here.
What does Uday Kotak's commentary mean for the sector? Because he spoke about pressure on the microfinance business, he spoke about pressure in the core business. How do you think that how should the industry read his comments?
So I think earlier, if you would have seen his commentary 2 quarters back, it was totally against what it was this quarter. And everything was much better in the commentary, the growth prospects were better off. Now he's in line with the industry, let's say, in that certain sense. But I still feel they have an opportunity to gain market shares out here, especially in, let's say, auto and other segments where they can be aggressive. But I think internally they are taking a call to lay off that area as of now and watch for more delinquencies in the system if it comes up. Otherwise, if I see on a full basis of commentary, I think HDFC and Kotak somewhere are turning, and even Bajaj Finance for that matter. I don't know this quarter results, but they're turning somewhere cautious, and that's where the growth rates of their advances will come off. And that's where I think a bank like Axis or ICICI or someone else has a scope to increase the market share. Taking a certain amount of risk for sure, but I think whoever has raised money like Axis has, Bajaj Finance has, but I think Axis has more space to get in. Even a smaller market shares really help the advance book. So I would really look at Axis Bank very closely.
Okay, Mayuresh, before we move, given that how IndusInd performed, how HDFC performed, how Kotak performed, you think the market will tone down expectations from, Bajaj Finance or an Axis Bank or an ICICI Bank?
I think the result will be obvious, right? I think the toning down will come through. And I saw your tweet yesterday as well. If these banks have performed like that, what will the others do, right? So it's going to be very interesting on how these guys will actually deliver. Again, I think the whole component in terms of asset recognition is largely over, as Samir is rightly pointing out, for banks like ICICI, Axis. So to a certain extent, I think at least the asset quality pressures will not be there. The advances growth will slow down. So I think you don't expect the advances growth to be the normalized version of what it was a couple of quarters down. But yes, I think valuations have to simmer down as well. So I think you cannot have the same valuations for lower growth rates.
Okay, that's the view that's coming in on Kotak Bank and the banking sector. The other sector which has managed to do well is the pharma sector, especially some of the companies which are on the mid-cap end. Some of the slightly larger companies like a DV's Lab has managed to rally significantly, or Ipca Lab has managed to rally significantly. What's the view on the pharma sector, and which is one stock that our guests believe could be the outperformer going here? Samir, what's your sense? What do you like in the pharma space? Do you think that green shoots are now coming back after almost 2 years of doing nothing?
So I think there is movement. If you see US generic prices index, which we customized, there is a month-on-month improvement in that index. The prices are seeing kind of a bottoming out right now. Not maybe the price growth is kicking back that much, but I think now there is a slight performance changes in domestic numbers as well. And I think over there it'll be better off. It's too early to call the bottom fundamentally, and I think it'll be very pocket specific and company specific where they're able to pull off a better performance. So you can start having a look and come back to pharma as a sector of maybe a watch list, or start to do a SIP. I think being boring in the sector, I think Sun Pharma still stands out in terms of how much they've done in past 3 years in terms of R&D, the product changes, the revenue changes, and how much they're putting ahead in the future pipeline. So I think Sun Pharma right now, even given the valuation, is still better off. And in terms of balance sheet, is much stronger than other pharma companies. So these are spaces where I would start to put my SIP in.
So Sun is one, but which are the other ones probably you find attractive?
So I think over there, Dr. Reddy is deleveraging by selling the non-core. That is one. Lupin has taken out some kind of a non-core subsidiaries as well. So deleveraging of the balance sheets are much better in Dr. Reddy, Lupin. And if you go bottom chain, let's say a mid-cap like a Laurus Labs, who's more WHO driven or API driven, that becomes one of the potential targets where I think one investor can look at.
Okay, that's the view that's coming in. What's your sense on this space? Anything that looks interesting? Will Pharma make a comeback soon?
So pharma, in our opinion, should do well over the next few quarters. Within that, Ipca Labs is something that I've always liked in the past. I continue liking that. Now, if you look at the management committee, Darshan, I think their aspirational EBITDA margins are close to 23%. They delivered around 21 in the quarter gone by. The second element, obviously, is the formulations growth itself. So the export formulation growth obviously has struggled over the past few years, but I think it started to come back. Within the domestic business itself, I think they've clearly understood that anti-malarial is not the way to be, right? So I think getting into more therapeutical medicines, cardiovascular, so on and so forth, which is more complex and higher margins, is something which will also prop up their EBITDA margins. What also happens probably in terms of the affected plants, I think if the Ratlam clearance does come through, I think that will give a huge leeway in terms of more A&Ds for the US markets. And the export formulations is around 27-28% at this point of time. So again, I think R&D spends at 3%, aspirational margins of 23%. You're probably expected to see far more access in terms of complex products domestically, access to export markets, because even the global tenders have started opening up, which was a laggard for Ipca, and they're expecting 230-250 crores odd. And remediation cost is somewhere around 25-30 odd crores, which should be contained as well. Valuations might be in the mid-range at this point of time, but my opinion is that if they continue to deliver earnings, I think it's a good stock to back.
You think the market is not factoring in any kind of clearance for the plants which are under import alert, because then you think that the management has decided to make peace, okay, this is where the problem is, let's keep on it and work on other things?
So I think they've been living with this problem, right, and it's still delivering. So I think if the problems go away, right, because Ratlam is the API supplier for plants in Silvassa and Pithampur as well. So I think if that starts happening, I think more ANDA launches, which means the US business also starts coming back to the fore. So I think there is a added element in terms of more earnings can get added as an upside risk factor if somebody is bearish onto the stock.
So Ipca's one. Anything else that you feel interesting? You feel that for a longer term perspective, something should be accumulated in the sector?
So Dr. Reddy's probably also looks interesting, because what they've got in terms of Suboxone, I think the market share is maintained at 15%. Alvogen, I think the market share should increase going forward. They've got a couple of big blockbuster drugs on the sidelines. So what happens with Nualing and Copaxone and the clearances for Srikakulam and Duvada, I think that's going to be very, very critical as well. PSAI margins should probably remain constant, and the India growth should also probably improve going forward. So I think it looks like it's a good bet from the top tier names. And Alchem Labs, though valuations might be very, very expensive at this point of time, I think the delivery that they can do on the domestic side of the business and the key products that they still are holding on to in the US market, that probably gives them the edge even.
Okay, that's the view that's coming in. Some of these export-driven companies, while MNCs and some of the domestic players like Alchem Labs have done well, some of the other companies have started to move up, especially even the hospital chains have started to move up. So pharma is one sector that you need to watch out for. The other one is real estate, and it has been doing well for itself, be it a DLF or be it some of the companies like an Oberoi Realty, Godrej Properties, or even a Prestige Estates. Prestige Estates trading at a 52-week high. There is enough traction. Let's pull up what it's doing and have it's managed to move up. Today it's down 6%, but it's up 45% in the last 3 months. Do you like real estate? Do you like Prestige Estates? What's your view on the counter?
No, so I think it's done phenomenally well, Darshan, and it's done phenomenally on the basis of their annuity business or their rental business actually delivering in the past year. So even in the quarter gone by, I think if you probably look at their commercial real estate, I think that had done exceedingly well. If you probably look at their retail commercial side, I think that also probably delivered. So as a percentage in terms of how the top line is, it's almost 12-13% at this point of time, and that gives consistency to the overall cash flows that Prestige has. I think the overall sector is rather beleaguered at this point of time because of inventory which is built up onto the system, realizations which have actually come down, leverage on the balance sheet, because of which I think interest outgo is pretty huge at this point of time, and even the working capital constraints. So looking into all this, I think relatively, I think it is best a place because of the annuity business. But the other elements, I think the net debt has actually moved up. So if you go 2 quarters back, it's moved up from 1.75 to 1.86 to 1.91. So that's not an encouraging sign. And within that itself, I think almost 800-900 crores out of the overall gross debt of almost 8,500 is in ongoing projects. So as they keep on taking on new projects, I think the working capital needs are going to increase. The second element, which is a little bit encouraging for Prestige at this point of time, is that the realizations per square feet are actually inching higher. So if you probably look at Q4 numbers, they had crashed down to somewhere around 5,400, 5,500 square feet, had bounced back very, very sharply to around 7,100 odd. in the past few quarters on an average. The third element obviously is the land bank that they've got. It's almost 29-30 million square feet on land bank, which probably gives them the ammunition to do a few key launches if they feel like in terms of new sales velocity. But I think the move that we've probably seen at this point of time, what they're probably doing in terms of the leverage built up on their balance sheet, I would clearly like to see deleveraging happening. The management is speaking of that. They're probably expecting to get net debt equity to 1.4 from 1.91. But let that happen, I think. And if the stock does correct, I think that will provide better valuation coming.
Okay, that's the view that's coming in on Prestige. What's your sense on Prestige?
So I think it's trading at, let's say, a 60% premium to 5-year average, given that they have performed really well on the commercial side in past 12 months. But now again, that consistency of that kind of a revenue growth and PAT growth comes at risk. So I think now balance sheet is the worry. You've given that performance to P&L, understood. Now, if I'm an investor, I'm more concerned about how you deleverage and how you come back. Maintaining the growth rate, which becomes next to impossible in a real estate company until and unless some major divestiture happens at a subsidiary level or some project level. So I think these kind of scenarios become a favorite place for me to book out some kind of profit, take some money home, reduce the weight, let's say, in that portfolio. Because right now the only risk which I see in the system is the South market hasn't seen the inventory built up. And the prices now in past couple of quarters have started to come off and now showing some stabilization if you see Sobha, if you see others. But I think now they'll have an inventory worry coming in for them. Because what happens, South generally goes, say, let's say 2 years or 3 years different from North or West. And that's where the larger markets are. So I think now South kind of companies will face inventory issues, and I would take some profit out of that.
Okay, that's the view that's coming in. Wait and watch move on Prestige Estates. And finally, since most of the mid caps have started rallying to the start of the year, we're asking our guest, it can be a mid cap, can be a large cap, but one stock which someone could hold for 1 year, probably on the fundamentals, it looks interesting. Samir, anything that looks interesting?
So I think for me, CDSL always looked interesting.
Okay.
The valuations, because of the mid cap mayhem, really came off. They have gone slightly a bit higher, but I'll still suggest a SIP in that. Right now, mid caps, I am not into a lump sum investment. I don't favor it. I favor a SIP in a balance sheet strong. CDSL has a balance sheet strong. In the private sector, they have more market share than NSDL. In the public, NSDL has a higher market share over there. And I think now private going more digital on the demat compulsion, and that's where CDSL might gain a good market share again. And I think their earnings actually come up when market starts moving up. So even if next 6 months, 12 months there's a recovery in the economy and the markets, I think especially CDSL will be a good proxy to play.
Okay, CDSL is something that Samir is saying. What about you, Mayuresh? Anything that looks interesting?
Yeah, so GSPL probably looks interesting at this point of time. If you probably look at the dynamics for the sector as a whole, I think transmission volumes for GSPL should hold out pretty nicely. So even in the quarter results to come, our own expectations is anywhere around 38, 39 in terms of transmission volumes for GSPL. Now they've managed their balance sheets pretty well. So if you probably look at their cost element and how they're delivering on the EBITDA front, I think the leverage has played out very beautifully on their balance sheet. So if you look at the core valuations for their transmission business, and obviously there is a risk of factor in terms of one of Reliance plant starting off and volumes getting reduced on that front. But they've actually signed a couple of SPVs, so that compensates for any loss of potential volumes that the Reliance plant can deliver. So I think that takes care of one of the risk elements for their core business. If I value the core business on an EV/EBITDA levels on a FY21 basis as well, I think the value at which the stock is at current price, around 220, 230 rupees is coming from the standalone valuations itself on a very conservative basis. Now toss that in with the valuations that it has in terms of a stake in Gujarat Gas of almost 53, 54 odd percent. Add a 25% holding company discount, you'll still find that the stock is very, very attractively placed, both in terms of core dynamics and the value can Gujarat Gas can offer for the overall.
Okay, so that's the view that's coming in. GSPL as well as CDSL are the two stocks that have been spoken about. But with that, it's a wrap on today's edition of Hot Money. Many thanks to my guest, Mayuresh and Samir. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.